What's up, guys? So today I wanted to talk about a setup I recently took. I also posted it in my Telegram channel, but I wanted to explain it in a bit more depth because I got some questions from people about the setup. So that's why I make this video. So I always start at the daily chart. And as you all know by now, my trading is based around the concept of liquidity and accumulation and distribution by Wyckoff. And what stood out to me on the daily chart is this. This was a very important swing low to the market because look at the reaction we got once this swing low was made. There was some strong buying action at this level, so I want to see what happens when price makes a false breakout of this level. I want to see what happens to the liquidity below these lows. Are there people selling the breakout? Are stop losses getting triggered from people that were long, and is the liquidity being absorbed by a bigger player? And as you can see on this day, these lows broke and we got a very strong reaction and a very strong close. So this was very telling to me. And that's why I wanted to be long the next day. So if I zoom in on the hourly, you can clearly see these two equal and unbroken lows, and usually below these lows, and especially because it was such an obvious point on the daily chart, there will be liquidity below these lows. There will be people selling the breakout of this level, and there will be people having their stop losses below this level. So there's liquidity, and as we all know, big traders need liquidity to fill their positions in an effective way. This is the day in question. As you can see, the lows got broken and there was a very, very strong move to the upside. And the day closed above this blue box, which is very important to me because I have statistics on this pattern. So these two broken lows and then they close above the blue box. There was a 67% chance of hitting the upper green line before hitting the lower green line. Let me get my statistics to show you. This is the statistics on the pattern, and as you can see, currently is 68%, but at the time it was 67. As you know, I love to backtest, so this is just one pair. But yeah, that's how I got these statistics. So the statistics were in my favor on this setup. I also have some statistics about the odds of a drawdown after this pattern occurs. And the odds were there was a 70% chance of a retracement of 30%. 30% was around a little below the red line, but because this high on this big candle was, in my mind, the last high, the last bit of resistance price made before breaking out of the blue box, this is where I put my entry, my limit order. Also, what stood out to me is that there was a 70% chance of retracement, but also if I look at it at a discretionary way, this and this high, these two highs got broken, and there most likely would be some liquidity above there. Also, the orange box shows that this was the origin of this very strong down move. So you can expect a retracement over here. There will be some sell orders. So I was expecting a retracement because of the statistics, but also because of how the price action looked. And that's why I put my limit order at the red line to potentially capture another move to the upside, as I was expecting this to happen, clear these equal lows and hit this area of supply, as people call it, because this was the origin of a decent move to the downside. So that was my target, also because of the statistics. The entry was based on the drawdown statistics and the chances of hitting target. But unfortunately, you can see I got to stop out, and that's just what happens. This was the first trade of 2021. It was a great setup. The target was around 1.6R and the chances were very good, but it was a losing trade. But that is how I plan my trades and how I know before I enter a trade exactly where my target is, why it's there, and what the odds are of hitting the target. So I hope you learned a lot, and I speak to you guys in the next video.